Morning everyone, welcome to Ainsley News. It's Wednesday, midweek. You might have noticed something last night in the bullion market. We're calling this the calm before the unknown storm, and why shares surged and gold fell last night. Unless you live under a rock, you may have heard the US Fed meet tonight and will almost certainly raise US rates for the first time since December 2015. Since we left the gold standard, there's a 100% track record of every reversal of rate policy triggering a recession soon after. 100%. And yet last night, growth shares surged. The NASDAQ up over 3%, and gold, silver and bonds all came off. How come? Last night, the certainty of a rate hike was even more locked in when we saw US PPI, or Producer Price Index, print an eye-watering 10%. The highest since Bloomberg data began, and the 21st straight month of rising prices on the factory floor. Critically, too, it's still 2% above CPI. That inflation print is not so transitory now, is it? However, we also saw a much weaker than expected New York State Manufacturing Index print. This from Bloomberg. The Fed Reserve Bank of New York's General Business Conditions Index decreased to minus 11.8, the lowest since May 2020, from 3.1 a month earlier. A report showed Tuesday. Figures less than zero indicate contraction, and the gauge was well below the most pessimistic forecast in a Bloomberg survey of economists. The Fed's measures of orders and shipments also plummeted. Employment growth also softened. In a sign that supply chains remain fragile, an index of delivery times jumped more than 11 points. And so we have the setup, again reinforcing the big Fed policy mistake trade that the Fed will be forced into hiking into fundamental weakness. And reinforcing again, we've mentioned that every time these guys raise rates, there's a 100% chance of a recession or financial crisis. And so the psychology of last night's trade may well be the belief that yes, the Fed will hike, but maybe not as aggressively as it's already priced in, and then almost certainly will be quickly to have to reverse course and unleash a fresh round of monetary stimulus to fight the inevitable recession that the hiking has triggered. Some call the long-term US Treasuries market the market of truth. That market is telling us exactly that. Looser money is around the corner. We're about to, already have, peaked, and 30 years of structural declines amid the sheer weight of debt accumulated since we left the gold standard, and the associated monetary debasement indicates we will soon reverse course towards zero. Myopic equities investors look at two choices: growth shares or value shares. The darling of growth is the NASDAQ. Last night rescued it from hitting its longest bear market since the GFC by just 3 days, 115 days, and down 21.6% from its highs. The acronym TINA, there is no alternative, described this crowd mentality view on equities. What the myopic equities crowd, or more dangerously the passive fund behemoth, forget that the structural issues in the entire economy look at the Fed's choice of hike and crash the entire equities markets, growth and value, amid a moribund economy, or don't hike and rampant inflation destroys consumers and corporate earnings alike, precipitating into, you guessed it, a share market crash. To narrow either scenario to shares is also way too simplistic. The elephant in the room, as always, is the extraordinary scale of intertwined derivatives and CDs that sit on certain assumptions that would get fundamentally tested in either scenario. Likewise, whole property markets, arguably none more than Australia, are predicated on ultra-low interest rates. As we reminded everyone on Monday, the Exters pyramid and funnel analogy we used should be at the forefront of investors' minds right now. It is rare that an asset presents such an each-way bet as gold potentially does right now. It's just that the penny hasn't dropped for a lot of people. But if you're listening to this news, I'm sure the penny dropped a while ago. So, if you're ready, jump over to anzbullion.com.au for all things physical, gold, silver and platinum. Always great to hold that in your hand, wealth. And anzwealth.com.au for all things cryptocurrency. All those large cap crypto you can buy, sell and swap between bullion as well. If you haven't checked that out, great tool there from Ainsley Wealth. And goldsilverstandard.com, which is a crypto built and backed by gold and silver. Very efficient way to get into bullion. You can do it at any time of the day through CoinSpot. As well, you can trade 7 days a week, 365 days a year, buy and sell and trade with real gold and silver. All right, everyone, enjoy your Wednesdays. Enjoy the next week or two as we're ending March. There's going to be some very tumultuous times to look forward to with rates raising and everything else. We'll catch you tomorrow, everyone, for more news.